And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and welcome to the Market Prep. All my futures friends and family, it is Thursday, April the 13th. My name is John Hoagland. Thanks for trusting me with your time. We're always, as always, focusing on context, good risk management, and patience in your trading today. Happy birthday to an old friend of mine today. I'm sure you're not watching, but happy birthday anyway. The economic numbers this morning, jobless claims and PPI came out. The month-over-month PPI, they were looking for a positive 0.1%. It came out negative 0.5%. So this is an indication at the wholesale level that inflation may be cooling. This is good news, of course. Jobless claims came out initial at 239,000. I guess that's the highest since January. They were looking for 232,000, came out 7,000 more than that in the initial jobless claims. Continuing jobless claims fell by about 4,000 at 1,810,000. And again, maybe some good news as far as inflation is concerned. The equities stock index has cheered those, at least initially. We're still waiting for the nat gas numbers to come out at 9:30 a.m. We had some earnings this morning. Delta came out missing on both earnings per share and revenues. So maybe a little bit of a warning sign as far as earnings are concerned moving forward. That's just one company. We do know that we've got some of our big banks opening earnings season tomorrow. So earnings season begins really tomorrow. We do have a lot of economic numbers due out tomorrow as well. We've got retail sales, import-export, industrial production, business inventories, and Michigan consumer sentiment. So we are not out of the woods as far as economic numbers by a long shot. I don't see a lot of talking Feds on the schedule here this morning, so I'm taking that as a good thing, because whenever they start talking, things start changing. Like the FOMC minutes yesterday, they mentioned recession and the markets turned lower. So stocks this morning were steady to a little bit higher prior to the PPI. And as always, we expect anything can happen, ACH. So some of the cooling inflation numbers per the CPI yesterday had investors optimistic until, again, the FOMC minutes included the words mild recession. Caveat to that, this meeting was held during the banking crisis, and traders have a short memory. Focus on the markets that you're seeing today. Today's news, today's markets, trade what you see. Crude prices have been holding steady overnight, near the 2023 highs or at 2023 highs, awaiting the monthly OPEC report that is due out later on in the session. So keep your eyes peeled for that if you are going to be trading crude today. A lot of you probably are. VIX this morning down a little bit, 1891. It was 1936 yesterday. The dollar index down again this morning at 101.16. It was at 101.60 at this time yesterday, and the yield on the 10-year up just a little bit. We're at 3.4%, where it was 3.35% yesterday. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome. Subscribe to our YouTube channel. You get notifications when we do go live. Speaking of going live again today, we do have Make Hoag Money right after the market prep. So I'll look forward to seeing you there. Bring your good trade ideas. Got to make me some money. All right. Good morning, everyone. Shaw, again, first in the room. Happy Thursday. You win the prize. Scott saw and he conquered. Brother Rick Randolph, good to see you this morning. I love you, buddy. John, good morning. Jason, Terry, Haggle Matters. Andy, good morning. George. Lacey is a little tired this morning. She had a lot of exercise yesterday, so she's currently resting peacefully as the center of the universe probably should be. Will, I'm glad that you're finding our rules helpful. Helpful in trading, helpful in investing, helpful in everything. Applying drawdown rules during longer term investments, you should be seeking help with that. I mean, I am not a financial planner. My drawdowns is don't sell the bottom. Typically for longer term investments, I'm in for the long haul. You will usually try and keep some cash on hand for opportunities to buy weaknesses. In my lifetime, I've seen some really bad crashes, and it seems like always that the world is going to come to an end during those. But every time the market has returned to higher highs, and I'm hopefully going to continue to see that as life continues on. One of my dad's wisdoms was always, well, the market always looks the best at the top and the worst at the bottom. You want to be like Mr. Potter in It's a Wonderful Life. When everything seemed to be crumbling around him, he was there scooping up bargains at 50 cents on the dollar. So longer term investments is, you don't look at it. When things are bad, you take cash and you put it in. Diversification is always a good idea, of course. And the older you get, the less you should have in high-risk investments. That's just my only advice on that. But again, you should be seeking, professional help if you're really doing some serious longer-term investing. It's just my opinion. I mean, you're welcome, of course, to do your own investing. You may do better than any financial planner. That's for sure. Nobody knows what's going on, right? Brian, good morning. Data F Trading. It seems the rally is stalling. I'm wondering about this. Well, it depends on your time frame. This morning the pop this morning was emotional. What's going to happen the rest of the day? Only the markets know. Andy Bleed, AS feels heavy to me. We're going to take a look at this on the charts, and I'm going to have maybe some good insights on carrying yourself through the trading day today. That's the goal here. Bill, good morning. Dan Trader, good morning. Tim, good morning. Will, ES seems to have run its course short term with the earnings dangers ahead. Yeah, we've got a lot of earnings coming out, and we'll have to see how those play out. Rooster, good morning. Crowing early. Harry G, Sarah Hall, prayers and love as always to you. My guy Vince, good morning. Good to see you. Rusty, good to see you. Travis, good morning. Steven, Scott, Shy, happy birthday. Very nice of you, Dan. Tayo, there's a name I'm not sure that I've seen before. Welcome to the Market Prep if this is your first time here. At least maybe just your first time commenting, and I appreciate you saying good morning. Where did I go? Dr. VJ, good morning. Jason, Pete, Pagel, Joe, good morning, and feeling grateful today. Joe, I love your one-word comments. Always make me smile. RP, Cos, Alejandro, RP, big announcement happened yet? Yes, this PPI and the jobless claims came out. Those are the big ones for today. Jason, Snowflake, John, Vlad, SNR, your review is very good. Well, that's good. Makes me happy. And I'm hoping that it is very helpful for everybody. Brett, good morning. Already done for the day, up 1,200 before the day starts. Not going to push it. Happy trading to all. Brett, go play golf. Go do something fun. Why not? You deserve it. Snowflake, what's the biggest change you've seen in the futures market since you first started trading? The biggest change in the futures market is the execution. We used to do all of this in a trading pit with a few hundred people. Now we all do it from home on screens. Made things a lot. Made made trading very different. It's a lonely business now, whereas we had hundreds of people around us all the time. But I think the markets are still the same. They are never-ending two-sided auctions that occur in multiple time frames. German, good morning. Do you have to have access to the express trading account? Should we pass first the trading combine? Yes. Yes, you have to pass the trading combine to get into the express funded accounts. Good morning, JT. Halfback for yes. Riesenhauer at 41.44. We'll keep an eye on that. Good morning, Edward. Good morning, Austin. Good morning, Elisa. And got to go carry some mail now off to your day job. Brett, always good to see you. It's going to be a much better day in your day job after having a morning like that trading, right? For all of you that just popped in and said good morning for the first time, I really appreciate it. And we're going to get into the charts pretty quickly here because we do have make-whole money. We want to be in there as close to 820 as we can so we can prepare for the equity open. Let's take a look at the markets. This is going to be the daily in the S&Ps. A lot of folks kind of speculating that the auction to the upside may be stalling, and I can't say that I agree any more than I do. Excuse me. So this was the banking issues that we had down here. Since then, the market has been moving higher. A week ago, last Monday, we saw that the open interest started to fall on up days. We said at that time, there's likely going to be some sort of a change. We're either going to fall into range and balance, or we're going to see a deeper pullback. We have fallen into range and into balance. Even yesterday, when they started talking about mild recession, it didn't change the market state at all. We're still range bound. So there's really no change. Now, there's a couple of things I want to kind of point out in this situation we have here. Let me remove this. Let me remove this so we can see this a little more clearly. Come on. I'm trying to get this cumulative delta to expand here. And it's giving me trouble. All right, well, we're not going to mess with that too much. Look at how positive delta was here. We're talking about 70,000 positive delta. And ever since the market's been moving higher, delta's been decreasing in positivity. This is a divergence, right? So we're finally in balance. The delta has finally kind of fallen into balance. But this is an indication that maybe there's longer time frame buyers that have been involved in this move to the upside that could be keeping short time frame speculators, medium time frame speculators a little bit on the short side. Well, this consolidation here is probably doing a really good job of evening out those short and medium time frame speculator accounts. We know that there was important information last week and this week where a lot of speculators were probably flattening positions. So I'm feeling like the market is preparing for some sort of move away from this area. It's been hanging here for a while. The market does tend to balance more than it does to trend, but I'm looking at this as an opportunity for us to really see that the players in the market, be they short time, medium time, long time speculators, have evened up their inventories. The longest of time frames, the big money, the banks, the funds, and all of that, well, they have positions in everything, and they're balancing those positions between them. It's when they become active where we see our direct competitors, speculators, getting too long or too short. The move here a week ago last Monday was indicating that the auction was tiring, that the speculator sector of the market was probably getting a little bit too long. So we either see a pullback or we see balance, and we're in balance, and nothing that has happened since then has changed that. So we're looking at a market that is in a two-sided auction. When it gets too expensive, sellers come in and sell it. Gets too cheap, buyers come in and buy it. Back and forth, the market goes. So we added 8,000 in open interest yesterday, and I believe that was probably new shorts. Volume is always bigger on down days. That doesn't scare me. We've got the delta divergence, and we are still in balance. Take a look at the 30-minute chart here. So yesterday, we had delta convergence. Delta was lower all day long as price continued to push lower, but it didn't change market state. We may be in a situation where the shorter time frame, weaker hands traders are holding on to positions that they put on yesterday that are short. We may be too short in our time frame, day trader or short time frame, swing trader time frame. So the market is showing overnight inventory to the long side. The market is likely to open in range and in value from yesterday. That's probably not my favorite nuance to be thinking about, because it's going to probably keep me relatively patient this morning, because there's very little change in the perception of value in the S&Ps. So the delta congruency yesterday is probably shorter time frame short sellers adding open interest on a down day with delta convergence is probably shorter time frame. Look at where we are. Look at where we've been. We tested the high yesterday. We moved towards a test of the low. Last week's high is this purple line. Last week's low is this purple line. We tested down to it. We tested to it. We're in the middle of it. Stay patient today. With all the news out today, with everything we've been through this week, the fact that we're still range bound says something. Be patient. Take a look at the TPO chart from yesterday. Normal variation, a bit extreme. Points of control are higher. The market spent more time and executed more volume at higher pricing. Where are we today? Well, we're kind of right in the middle of the range from yesterday. Is there a possibility for some sort of repair? Maybe. We got a point of control here from yesterday. We've got some potential repair down here, but we got down there yesterday. We checked down to those levels. I'm going to stay real patient today in the equities. Unless there's some sort of change, I'm going to demand extremes. I'm going to demand like IB high or IB low. Speaking of initial balances, all 7 of our markets today left one extreme of the regular trading hour session at an IB high or an IB low. Here's the IB high, the high of the session. Doesn't bode well for being too patient, but you did have opportunities up against this level on a couple of occasions to look for a potential short. So what am I telling you? I'm telling you, I don't know. Nobody knows really, but the nuances and the balance and the day types and everything else is saying we're not directional. We're range bound, and as long as we stay range bound, I'm going to be focusing on the extremes of those ranges, be they the extremes from last week, which we've already tested, or if it's a day time frame, I'll look to the extremes of the day time frame. It's going to be a patient day, I think. There's no real change to the structure of the market. What about crude oil? Well, overall open interest increased yesterday. It was kind of impressive. Overall, we added 22,000 in open interest. Lacey, no. Oh my goodness. Don't do that. Sorry about that. I lost my train of thought there. So good volume yesterday, considering its rollover, adding 22,000 overall in open interest on all of the months of crude oil, while we lost 26,000 in the current front month, which is this month. So really, I mean, we added 48,000 in open interest in future months, which is pretty impressive. This is this year's high, and I'm not real happy about it. Still awaiting the OPEC monthly meeting data, so we're kind of on hold here. Take a look at the 30-minute chart. On hold. Value high, last night's high. Value low, last night's low. Weekly kickoff, basically the high for the year, magnetic. I'm going to be looking for some sort of change here, but I'm going to have to try and stay patient. We've opened, we're in range, we're in value. We have a high volume node at the low of value. We have a high volume node at the point of control / settlement. These might be interesting opportunities for an execution because they allow us the opportunity to limit risk. Take a look at the TPO chart and we'll move on here. So here's yesterday, almost a double distribution. That's why I'm kind of suggesting potential for repair to these two high volume nodes, but it's a normal variation, kind of extreme day. Look at the overnight, very even bell curve. This market is using up its opportunity or its ability to facilitate trade in this area. And it looks like we may have the opening range at the low of the regular trading hour session, which does say something. Take a look now at the NASDAQ, which is a completely different story than the S&Ps. Very related, but totally different as far as their look. We tested the overnight or last week's low here. In the S&Ps, we're here in short time frame. We're in the middle. NASDAQ testing the low from last week. So we're at a balance extreme here. This is an area of balance. We're teetering on a previous area of balance here. Looks like we're rejecting. Looks like we may head back towards the center of the current area of balance. We added 1,400 in open interest on a good volume, which is always the way in the equities when the market breaks. But that doesn't impress me. 1,400 extra open interest. Is that somewhat inert? We have a similar cumulative delta divergence as price continues to try and push higher. So there's some similarities, some not. Where are we? We've got maybe a little bit of overnight inventory to the long side, but bringing us back into range and balance and value from yesterday. So again, I'm probably going to have to try and stay patient today and look for trade locations as the day goes on. There's very little change to the perception of value. Stay patient. I'll watch these lows like a hawk. There may be a nice sturgeon down there for us to catch. Here's the TPO chart. Normal variation, very similar to the S&P chart, right? It's usually going to be in short time frame. Normal variation extreme. The activity to the downside yesterday seems to be rejected, at least for now. And I'm going to stay patient because, again, we are in range and in value. I hate that when I say the nuances are even. especially in the S&Ps. You know, the nuances, even. We have tested the lows. We have tested the highs. We're in the middle. There's nothing in these profiles that's saying that we're too long or too short. So stay patient. All right. Now, gold. Look at this. We were right up against this trend line prior to the data this morning. We must be seeing the dollar hitting the skids. But the coiling activity, we've seen a breakout, and we've seen that breakout head us right towards 2060, exactly, almost within 8 ticks of our weekly kickoff high so far. Upside structure intact, and acceleration is possible today. Take a look at the 30. So here's our weekly kickoff high, at least finding resistance for now. Got a lot of overnight longs in this market. The data that came out at 7:30 emboldened buyers. This is going to be a tough spot for them up here. But again, it allows us to limit risk. There may be a sturgeon up here as well. TPO charts. Oh, long liquidation. No. We added 6,000 in open interest yesterday. Aha! Maybe we got too short yesterday. This is a long liquidation profile, but with an increase in open interest, there's also some new shorts in this market. If those shorts are in short time frame, they're hurting right now. They're in a lot of pain. That's what the market does. It takes the price to the point of biggest pain. Here's the euro. Yeah, we must be seeing the dollar getting whacked here a little bit. Yep. Yeah, it's getting whacked. It's down around 101 right now. All right. So here's the euro continuing its move to the upside. Structure was strong to the upside. We had a good jump in open interest here yesterday on higher volume. The auction is still bringing in business. I'm giving this a B plus for the longer time frame auction, and it's certainly paying off now. Weekly kickoff high in sight. Does that make us too long? Does that make us too long in gold? We'll have to see. Eyes on the US dollar. Here's the 30. All right, so we open with a gap. We are keeping the gap. We're looking for opportunities to buy weakness if we can't close the gap, but we're getting up against here again. This weekly kickoff high is going to be a tough place for price to continue. We're looking for longer time frame participation at these levels. Longer term traders rejecting this price, selling against it, price goes lower. Acceptance above it, longer time frame traders may have to turn tail and turn buyer and continue this market to the upside. Once in a while, weekly kickoff levels become magnetic. We're seeing it in crude oil today because we're waiting for new information. Here's the TPO chart from yesterday. P-shape, short covering, but we added open interest. 6,900 in open interest is pretty big. New longs, and they're getting paid. Are we too long up against this weekly kickoff high? Here's the 10-year. Holding the line, holding the line, holding the line. Upside structure, good. Adding 3,600 yesterday off that line on higher volume, good. Giving this upside auction a grade B, because really we've got even highs but higher lows. We've got a wedge here, and as we get closer to the extreme, the apex, we're more likely to break out one way or another. Volume and open interest were higher yesterday at 36,000 additional longs on higher volume off that level. Here's the 30-minute chart. Again, opening and range and value. We did have some information come out that changed the perception But where are we? Two, maybe first day in potential range trade. Day two maybe in potential day trade, the range trade. Here's the TPO. Here's why I'm calling it potential range. All of these are B-shaped long liquidation profiles, but again, we've been adding open interest. IB high. So 100% of our markets had an extreme at the IB, at an IB extreme. So NASDAQ, this pullback is now sort of created balance, and this market is coming into rollover. Again, open interest is blurry. We lost overall 22,000 in open interest. That includes all contract months of natural gas. The May contract lost 54,000 on its own. So it's more like we added 28,000 open interest on this down move after a reversal pattern, bringing us really into balance. Take a look at the 30. We are rejecting range from yesterday. It was a B-shaped profile, losing open interest. That makes sense in the May contract, but not all of them. Here's the profile. So double distribution, weak high, low excess low. We opened outside of the double distribution. We are accepting moves to the downside. We re-accept between these two. A move to the opposite point of control is likely, or a little more probable. I wouldn't say likely. We're always working in probabilities here. Oh, it's going to be an interesting day. What do we have here? Stevens, tell us someday, maybe tell us what you think about institutional algos and other algos. Will it affect the markets for the future of retail traders? Well, I think it already has. A lot of the algos or HFTs have taken over what many of the traders in the pit used to do. They work the bid and the offer. They get hit on the bid, they try and sell the offer. They can't sell the offer, they hit the bid. The shortest of time frame traders have become machines. So retail traders have to work in a different time frame, if you ask me. Now, this is purely my opinion. If you work in a longer time frame, the algos and the HFTs aren't going to affect you that much. But if you're trying to scalp and compete with them, they are going to win. As far as like artificial intelligence and all that stuff, I have no idea how that's going to affect the markets. But it's a really good question, Stephen. And I don't feel as though the algos, institutional algos, HFTs, have that much effect on traders in my time frame. You know, there are trades that I take that I'm in for hours. And those are longer term imbalances, if you will. Great question, though. Stephen, yesterday there were a number of substantial icebergs. Yes, that's a sign of institutional activity as well as balanced on the buy-sell sides, but long-term money is placing their positions. And that's what I think really moves the markets, is when the longer time frame hedgers are executing, they're getting the shorter time frame retail traders, speculators, whatever it is, they're getting them stuck one way or another. And those are some of the best trades that if I'm able to recognize that my direct competitors, the other pea shooters out there, are too short, then I can take the other side. And when they unravel, they tend to unravel in groups like lemmings jumping off of a cliff. And if I can take advantage of that, then good. No, Lacey's middle name is Marie. And she gets that when she's in trouble. Watching them like, watching the lows like a hawk. Yes, patience and impulse control is the goal today, right? Nothing to do until we test the extremes. All right, Anne Marie. The sound effects. Yikes. I don't even remember what it was. But it's good to see you, Anne Marie. 30-year bond auction at noon today. When you give a trade, are you saying the move is strong enough to base trades on? When I'm giving the auction process a grade, it means that the auction is likely to continue. It's not a suggestion for taking trades. Although if I give an auction process an A, I'm probably not going to be looking for shorts unless the. Let me rephrase that. If I give an upward auction an A, it means I believe that the auction is healthy and likely to continue in that direction. Finding trade locations, that's your job, Pagel, I should say. I apologize. About competing with algos in the small time frame at higher time frame levels, where we need to enter. They may affect your entries and exits. That's for sure. So, Stephen, you think about this. When you're at a level in the chart and it's a layup, it says to you, "Oh my gosh, look at this level. How can anybody miss this opportunity?" When it's obvious, a lot of traders are going to be executing at those levels. The smart trader is going to know that the algos are recognizing those executions as shorter time frame traders. They also understand the risk tolerances of the shorter time frame retail trader. They don't know for sure, but they assume their stops are just past this level or just under this low or just over this high. And the algos will place orders to execute the opposite. They'll evaporate their bids or offers to try and push price to take out those stops where they'll assume those positions in better trade locations. Everybody gets stopped out. They all end up watching the trade play out in their favor after they've been stopped out. So that's something that you want to be thinking about is this an obvious short? Is this an obvious long? If it is, think about where you would put your stop and try your entry there once or twice. You're going to miss trades. Don't blame me for that. But when there is something that is obvious, it's obvious to everybody. If everybody gets in on that obvious opportunity, odds are the market is going to take out all their stops, and that's where I want to get in. We used to stand in the pit, and if there was somebody who bought them at 9, was still holding those longs at 8, bought more at 7, bought more at 6, we'd say to each other, he's got a moron trade on. It's going against him, and he's putting more on. And we wanted to be there when a trader like that would finally puke out, because we knew that was going to be the low. Seems mean, but we didn't put him in that position. And if you can't take the punch, stay out of the ring. You just get guys going, and so anyways, all right, I got to get going, man. It's 5 minutes to the open. We got to get to Make Hope Money. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Let's just have a relaxing, patient, and profitable day. Blessings to you all. I'll see you for Make Hope Money. You won't see me again till tomorrow morning's market prep if you don't come to Make Hope Money, but we'll see you then. Trade well, everyone.